What's going on? I'm Marcus. You're at the channel of the Debt Free Dad. Y'all already know what it is. And if you don't, we talking on financial takes, financial topics. I'm letting y'all know what we got going on financially in the household of the Debt Free Dad as we are tracking our moves to get rid of our student loan debt, but more importantly, to become first generation millionaires. So, this video is one that was interesting and impromptu for a few reasons. One, this news just came out. I looked and I was like, oh man, this is interesting news. Let me see what's going on with this. So it was breaking news. I wanted to do a video on it. And then I thought about it and I was like, you know what? It's a lot easier to just shoot it live as opposed to making the video and cutting everything out. It would have took me all day. Y'all wouldn't have saw it till Saturday. By then the news would have been old. So decided to do an impromptu live where we're going to talk about one of the biggest, but in my opinion, worst banks out there, Bank of America. Y'all already saw the thumbnail with the dude with the confused face on it looking perplexed. Well, essentially, what we're going to talk about today is Bank of America just released today that they have a new program. In their new program, they are essentially, hey, no money down. We aren't looking at credit for first-time home buyers who are minorities. Now, I got to give y'all a little bit of background before I go on my opinion and take and give y'all some of the facts of this, okay? So there's a few things about this article that made me give it the side eye, gave me cause to pause, and just made me go, that way I look on the thumbnail was the way I looked when I actually saw the article. Okay, the first thing is any news with Bank of America, I already think is going to be the worst of the worst. Bank of America, just in my personal opinion. Hey, shout out to Bank of America. You never know, your boy might work there one day. But just historically, in my experience, Bank of America and Wells Fargo are always terrible. And it's not just me who thinks that Bank of America and Wells Fargo are always terrible. Hey, what's going on, Judy? Thanks for tuning in. I appreciate you. I appreciate you. Thank you. But it's not just Bank of America and Wells Fargo that, the reason it's not any personal thing. It's just in my experience, the type of work I do, there's a lot of litigation, there's a lot of financial crimes, there's a lot of CEOs of financial institutions. And unfortunately, or fortunately, whatever, however you want to look at it, Bank of America, Wells Fargo is the worst offender. So when I first saw this news that Bank of America was doing something, my natural inclination, just based on the type of work I do, made me give it the side eye. Okay. The second thing that made me give it the side eye was that it was a program that's targeted directly to minorities. Hit me out. Hit me out. Let's before we go in, let's talk about it. Hey, programs to help minorities, women, Hispanics, Indian American, hey, those programs are great. But again, when I hear Bank of America, which automatically raises an eyebrow because of the type of background I have, then I see something directed towards minorities. My instant thought is just, I don't know about this. Let me take a look at it. So, and also my skepticism with Bank of America, let's just be honest. My skepticism with Bank of America is one that I think is well founded. It's just not because, Bank of America wouldn't give me a loan or something like that. There's no personal thing. Just look at the news. Look at the articles out there. All of the articles that you see on Bank of America just historically have been articles where Bank of America is always in something. There's always a lawsuit. There's always a class action settlement. There's always a discrimination thing. Just look at that. I mean, come on. Like Bank of America settlement, Bank of American overdraft fee, class action settled for $8 million, Bank of America Zelle scam, customers sue Bank of America for not refunding. I mean, it just goes on and on. So, I mean, if I just go down this page, it's just a plethora of litigation. So anything that Bank of America do is automatically going to give me cause to pause. That's point number one. All right. Point number two is also, I think, an interesting point because you got to understand how things are created, how things are developed, how programs are always created by some legislator, some executive, or somebody with this bright idea, and we never think of the consequences of those programs. It's like we think about the positive, but never the negative aspect. So as soon as I saw that Bank America, hey, no interest, no down payment, not based on your credit, home loans solely for minorities. Is this a good? Is this a bad thing? Let's talk about it. We know a lot of programs that are designed to help people, in hindsight, end up kicking people in the ass. Let's just keep it real. I actually went and looked at the statistics because I was like, this program sounds good, or it may have the potential to be good, but historically, I think every program, everything that's done is done from a place of trying to accomplish something, but we never understand or think about the negatives that could happen. You know, one thing where the program was actually a program designed to help people, and now most people regret it, is one that we talk about often. Student loans. Student loans were created to help people, to give people an opportunity to go to college, to give minorities and people from low income backgrounds the opportunity to get education. Now, let's take a look at the people who wish they didn't get student loans. New survey, new survey finds that 63% of college students regret taking out a student loan. That's example number one. So example number one shows, hey, programs start with an intent to do something good, but as that program rolls out over the years, people realize it was probably more bad than good. Yeah, I agree. I think that's a great point. The minute I thought about it, I was like, my initial reaction is I think this is definitely more harm than good. Yep, sounds like, yeah, I agree. Law students, I think student loans was the perfect example. But we talked about student loans, and I think that's a good example of a program that was created to help people and ended up harming more people. But let's take a look at a few other policies before we even go in. Before we get on Bank of America, we're gonna look at a few other policies that started out doing the right thing, or started out with the intent to do the right thing, but ended up absolutely terrible. The war on drugs, the crime bill. Like, hey, I'm just bringing these up as an example that, hey, a lot of times policies are implemented with the intent to do something good, but they end up being terrible. And I just Googled it and a bunch of stuff came up. The war on drugs, the crime bill. I can remember growing up wearing my DARE t-shirt, drug abuse resistance education. And we had this big head ass police officer. He was cool as a fan, named Officer Carter, who was in that school telling us to say no to drugs and McGruff the crime dog and all that stuff. But in hindsight, that program actually ended up being terrible. It sent a lot of minorities away for crimes that had sentencing guidelines that were just biased, that impacted minority communities. So the war on drug was one, where, again, an example of a policy that looked and started from, I guess, a place of being, oh, let's fight crime, and it ended up kicking a certain population, minorities, in the ass. That's just kind of what it is. So this one was interesting. Another policy we have here that apparently started out from a good place, but it ended up, kind of being harmful. And I actually never really even thought about this, but it was about child labor laws and international child labor laws. So essentially, international child labor laws, they were created. All these countries say, you know what, we're going to fight child labor. They came out with these laws, and it did not stop the hiring of children. It actually, people continued to hire children, but they actually paid them less because they were taking on more risk hiring them illegally. And then in countries like India and other places, a lot of children were responsible for actually being in the workforce to help the family. Now, again, child labor law violations when you're exploiting the child is, terrible. I get all of that, but we're just talking about from a standpoint that based on the data and employment, child labor increased following the ban. Like it's right here. Child labor laws, child labor violations increased following the ban. Children were still being put to work. They were paying less wages. So again, another example of a policy that started from a good place, but in the end, did it really impact or get the desired result that everybody wanted? Now, Here's another interesting one. This is going to be the last example before I really dive in to what Bank of America is doing and is it good or bad for anybody. Food aid. Now, the United States have been on their so-called humanitarian, i.e., spread democracy, humanitarian mission for years. And one of the things that they do for their humanitarian mission is they provide food aid to a lot of countries. Now, you would think providing food aid to countries would help, it would be good. No, 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 no. According to the data points, providing food aid to country actually increases the conflict because the delivery of the goods that the US provides is essentially so lackluster. These goods can be taken by armed vigilantes, by warlords. People withhold the goods to increase their influence for starvation. So a lot of programs start out from a place of trying to do something positive, but ultimately it flips on its face. It ends up being kind of crazy. So that's just was my initial thought. I saw Bank of America doing this, and I was like, I don't know if this is going to be good. Immediately, it sounded bad. Again, Bank of America sketch. And number two is targeted directly for minorities. Y'all just know historically, if you live in this country, a lot of times when you see something for minorities, you kind of give it the side eye, like, what y'all up to? Hey, it's not me. It is what it is. It's a historical fact. So let's dive into this article. We're going to talk a little bit about it. So let's see. Let's close this out. All right, so Bank of America launches zero down payment mortgage to help minorities buy their first homes. Here's who can apply. Now, I guess if you just kind of read this, it really sounds great. And one thing that we do have to admit that there is a discrepancy in home ownerships between minorities and non-minorities. It's almost something like 20%, but we'll touch bases that when we go down the article. So they're launching their new zero down payment, zero closing cost mortgage for minority communities to help buy their first home. Again, the purpose is that this is going to be available in certain cities to include Black and Hispanic or Latino neighborhoods. I can't even talk. What the hell? Eligibility is based on home income and home location. No minimum credit score or mortgage insurance is required. So you're going to have a lot of people taking out home loans, right? A lot of people taking out home loans. You're going to have no money being put down. They won't have to pay no PMI, no mortgage insurance, which is something that most times you have to pay if you don't put 20% down on a home. And it's not going to be based, there's no credit requirement. So how the hell do people actually get this? All right. And y'all could probably see where this is turning because y'all know how I feel about, it's certain things that are designed to be handouts to help end up kicking people in the ass. So let's take a look at some of the data points here. Okay, the loans are subject to rigorous underwriting and are based on credit guidelines, including on-time bill payments, including rent, utilities, phone, and auto insurance payment. Eligibility is based on income and home location. No minimum credit score or mortgage insurance is required. Applications do not have to be Black, Hispanic, Latino to qualify for the loans. Here's something, the first thing that I saw in there was really good. Now, I don't know how detailed it would be, but at least this sounded like it could potentially help. Before applying, applicants must complete a home buyer certification course provided by housing counseling partners approved by Bank of America and the Department of Housing and Urban Development. So far, so good. Again, I think that we all are clearly aware that there is a discrepancy. Hey, it says it right here. A problem does exist. There is a discrepancy between homeowners who are minorities versus homeowners who are not minorities. And let me see if I can go down. According to the U.S. home ownership, the home ownership rate climbed to 65.5% in 2020 for the highest annual rise on record. The home ownership rate was 43.4% for Black Americans, 51.1% for Hispanic Americans, and 61.7% for Asian Americans, according to the research. Okay, so let's talk about point number one. We identify and we know that there's a discrepancy. but it's not based, your ability to get this loan is not based on your credit. It's based on your ability, on your on-time rent payments, your on-time utility payments, your on-time insurance payments. Let's just kind of think about this from a common sense standpoint. If I got a job and I lose my job, right? Like, this looks great on his face. Hey, Bank of America giving out no zero interest loans to minorities. Great. If I have a job and everything is fine, or if I don't have a job, if I'm just irresponsible, if I'm irresponsible as hell, I could be the most irresponsible person in the world. One thing that I'm going to always have paid off is going to be my rent, because I need a roof over my head, my utilities, because I need to be able to do some cooking, turn the lights on, make my top ramen. I'm always going to have my insurance paid, because I'm probably going to want to make sure I have my vehicle. So the things that they are basing the ability to give this loan on is the essential stuff that people would take care of if you were on hard times. If you lost your job, you're going to make sure you take care of your four walls. What are your four walls? Your rent, you got a place to stay, your utilities, your vehicle, you can get back and forth to work. So think about it. Outside of that, people can have all kinds of credit card debt, all kinds of department store credit card debt, all kinds of payday loans, and nobody is looking at that. They don't give a damn about that. They're not going to even take that into consideration. I think just as a matter of course, that sounds kind of crazy. And, hey, my conclusion is I think Bank of America is setting people up in the long run for failure. Now, let's go a little bit back in this article, take a look, a little bit of deeper dive and see what's going on, okay? So it talks a little bit about Bank of America's commitment. Of course, here's where they're giving themselves a pat on the back, right? But let me go down, and before I even go to the main point of this article, my point is there is a clear discrepancy in home ownership between minorities and non-minorities. I think everybody admits that. Just like there's a discrepancy in the average net worth of non-minorities and minorities. Just like there's a discrepancy in pay for minorities and non-minorities. We all admit, we all know that those things are a problem. But here's where it kind of gets crazy. If there's a problem, I don't know, this is just me. If there's a problem with minorities, they can't get into homes. I don't believe, just on the face of this, and I got to look into details. This news literally just came out today. But if this is a problem for minorities to get in the home at a pace of other Americans, I don't think the fix is necessarily allowing them to buy homes with no money down. I think the fix is one that should come from increased income, jobs, and education. I mean, I think that's it, because I can already see the scenario. There's actually a data point out there, and I'm going to pull it up. I'm going to see if I can find it real quick. But there's a data point that came out. I think it was on Zillow, and they said that in 2020, between 2020 and now, 72% of people who purchase homes actually regret their purchase. So just think about it. If I'm a person, I qualify for this program based on me being able to pay my rent and utilities. I buy a home for $300,000. I don't pay anything down. I take the requisite course. I'm really going to put myself in a position to be screwed if the market has a downturn, which it looks like it's doing right now, and the value of my home goes from $300,000 to $250,000. I mean, I just think it's a problem. There's going to be a long-term problem. And I don't think that, just, hey, let's make a program to let people buy houses without being able to really do a real legitimate credit check to see if they can pay it. I mean, if the only basis for me to apply and get credit for anything was how good I paid my mortgage and my utilities, it's going to be perfect, because that's the two things I need. I need to be able to have a roof over my head and a place to wash my ass. So it's kind of wild. I don't know. I think it's going to be very, very problematic. Like I said, Bank of America, Wells Fargo's are just two companies that always give me cause to pause anytime they do something, because for the most part, I mean, think about it. When we had the housing crisis of 2008, how the hell did we get there? because Bank of America, Wells Fargo, all of these big companies who was giving out these mortgages gave out risky ass mortgages and sold them to Wall Street. And it ended up creating a crisis when people couldn't actually pay their mortgage. There was nothing in the article that talked about the type of mortgages. Like, I mean, think about it. If you're giving people mortgages with no money down, but it's a variable rate mortgage that could balloon in 5 years, you know what's going to happen in 5 years? The rate of foreclosure is going to increase crazy because people won't be able to satisfy these mortgage obligations. So, I mean, I think that's my general take on it. I think it's kind of like a, you know, yeah, it sounds like a good deal, but I low key think it's a way for financial institutions, preferably Bank of America, to come up on the backside. I mean, Bank of America, think about it. This is one of the same financial institutions who, when they had the mortgage moratorium and people, the rent moratorium, these financial institutions who are in the renting game, they had rent moratoriums and they were still filing paperwork to evict people. Like, you really think any program that a large financial institution comes up with is solely going to be in the benefit of the person buying the home? No, it's in the benefit of the company. If a bunch of people have foreclosures, you know who capitalizes and benefit? Bank of America. And it's terrible. It's terrible that that's the way the system is gained. But the same way you got like people on social media selling courses on how to be a man and how to work and finances and all this fitness courses and have no certification. The same way those people try to hustle, this is a version of the corporate hustle. The corporate hustle is, how can we come up with a way to where we could potentially help some people, but if it doesn't work out, we can capitalize on the back end. So it's going to be interesting when you have programs like these. What you should do is, it should be some type of data, some type of audit done to just kind of look historically when you created programs for homeowners, first time buyers. What was the default rate? The first year in the home, second year in the home, third year in the home. There's a whole big ass list of criteria that could be done to truly evaluate what's going on. But I mean, essentially, Bank of America is going to be giving out home loans to people, and you don't have to do anything for it. If you can't, if think about it, FHA loan, like, I mean, my first home was a FHA loan. It's 3% down. 3% down. And I know the price of houses go up. I know everybody, facts and circumstances are different. But when I purchased my first home, although it was years ago, like, I made probably like, I don't know, $30,000 a year. And it took some effort for me to be able to stash away 3% so I could have that 3% down payment and the closing costs for the FHA loan. I mean, part of me getting that money for that down payment created a little bit of responsibility in me to make sure I could put the money aside, make sure I kind of understood the value of it. So it, I don't know. I think the biggest way, the biggest help that could be done if you want to close the gap for families, you want to close the gap for minorities when it comes to home ownership, is doing things to increase employment, increase wages, and increase financial literacy. And I will give some credit to Bank of America because I did see something at the end of this article. Let me see if I could find it. I want to give them credit. Okay, I think this is the most important piece of the article, and this should have been the highlight of the article right here. I think this program in this last paragraph, they buried this all the way down at the bottom because people are just gonna read that headline and be like, "Oh shit, I'm about to go to Bank of America, get me a house, son. I always pay my rent and utilities on time." But the biggest and most important thing on this article was the last paragraph right here, and this should have been the headline. Bank of America also announced the launch of a new small business down payment program aimed at helping minorities and women business owners obtain credit and purchase commercial real estate through grants. That program is launching in Atlanta, Chicago, Charlotte, Dallas, and Los Angeles, and there are plans to expand to additional markets in 2023. Biggest takeaway in the entire story was buried all the way at the bottom of the article, and most people probably not going to read it. But this right here in this last paragraph is how you change the gap. This is how you fix the gap in home ownership from minorities and non-minorities right here. It's through business, it's through income, it's through providing grants. You get the grants, you don't have to pay it back. And they're actually killing two birds with one stone in this last paragraph, right? Think about it. You see, it's focused on commercial real estate through grants. It didn't say residential real estate. It's focused on commercial real estate because right now the commercial real estate market is really getting kicked in the throat because a lot of people are teleworking and a lot of people aren't at the crib. So that's point number one. So they definitely want to get, if we can get small business owners to start to invest in commercial real estate, and hopefully people start going back to work to occupy this commercial real estate, hey, that's a plus for them. So it benefits them. But this is the biggest part of this entire article that's going to get overlooked because everyone is going to just look at the headline on the top and see, hey, minorities buying their first home, no down payment, no PMI is a great deal, but we don't know the deal. At some point in the next few days, I think they'll probably come out with the actual terms of this program. What's going on, Britt? Thanks for tuning in. At one point, they'll probably come out with the actual terms of this program. So I'm interested to see what is going to be the interest rate of the loan. What is the term of the loan? Is it a fixed loan? Is it a variable rate loan? Is it one of those? I hate, these are the worst loans ever. Those loans that start out like fixed for the first 3 years, then that third year, it turns into like a variable rate loan and just balloons up and kick whoever got the mortgage in the ass. So those are all the things that just are kind of on the table. Anytime you see news like this, I'm not a glass half empty guy, but you got to look deep into it. You got to look at who's doing what, why they're doing it. And, my background, I come from a place, all I do is financial crime. So in doing that, I've seen the worst of the worst in Bank of America's Wells Fargo. I could give y'all a list of financial institutions that everybody in here probably bank at who I probably put some of the biggest CEOs away from doing some of the biggest crimes. So any financial institution, the name of the game is how can they make a profit? So you got to ask yourself, how can financial institutions make a profit by extending mortgages to people without looking at their credit? We're only judging them based on their ability to pay their rent, utilities, and insurance. Things that make you go, Oh yeah. Oh man, Wells Fargo is the worst. Wells Fargo is the worst. Yeah. I'm telling you, it it was people who got government funding to pay their mortgage. Like in 2008 when they had the housing crisis, and they do this every year. But this is how crazy these financial institutions are. And I know because these are the type of cases I work historically. So in 2008, when the housing crisis happened, they passed all of this TARP fund. Obama did his thing. And so the federal government gave all of the states a big ass pot of money. And they said, you know what we want y'all to do with this pot of money? We want y'all to come up with programs to help people stay in their homes. So you can modify their mortgage. If they're underwater, you can refinance their mortgage, modify their mortgage, give them a lower rate, help them start over. And if a person lost their job, they could apply for benefits in their state, and the state would pay their mortgage for anywhere between 12 to 18 months. I mean, so you think of people getting their mortgage paid by federal government dollars for 12 to 18 months because they lost their job. Now, of course, is a bunch of fraud. It's a bunch of fraud. People lying. People lose their job, get the benefits, don't tell them that they got a new job and they still getting the benefits. So there's a bunch of fraud. But there were instances on the record where, of course, the government isn't going to give the homeowner the money to make the homeowner pay the mortgage. So when the homeowner applies, I lost my job, I apply for the benefit. They say, hey, you're approved for this benefit. You give me your mortgage servicer information. And every month, like clockwork, the government would send a check to the servicer. There were so many servicers, mortgage servicers. Y'all know it's probably a bunch of servicers who y'all got y'all mortgage with who did not want to accept the government payments because they were like, nope. Think about it. If they don't accept the government payments, or if the person is already in arrears, they can initiate a foreclosure, do a short sale. They can flip that property, get their money from the short foreclosure. The game is so cold when it comes to financial institutions. So anytime you see something out there that sounds good on its face, there's always an underlying. You got to think how they're going to make a profit if the program works. With this program, how would they make a profit if the program works? Well, they're going to make a profit the same way they make a profit off of all of us who pays a mortgage. How is that? We make our interest payment every month. But on the backside, they say, hey, this is kind of a risky position we're taking. We're giving loans to people who may not qualify for it otherwise because we aren't looking at their full credit report to judge their ability to pay it back. So best case scenario, if they pay it back, we make money from the interest on the payments every month. Worst case scenario, if they don't pay it back, we foreclose on the home, we can resell it and get more. I mean, like, it's just a cold game, but that's kind of how the financial world is. It's pretty terrible. Yeah, they're one of the worst. Yeah, like I said, Bank of America and Wells Fargo. Typically, the bigger the financial institution, the worse it is. And I know that it's twofold. It's two parts. One, because because they're so large, they're clearly going to have more litigation and more problems because they have more customers. That's point number one. But the other point to why there a lot more issues with bigger institutions because they're a lot worse. Bigger institutions actually have so much income at their disposal, they can calculate in what they would have to potentially pay as a settlement for wrongdoing that they're doing. Like, think about it. If Bank of America, Wells Fargo, if a big pharmaceutical company, I litigated with pharmaceutical companies, AstraZeneca, Johnson and Johnson, Merck, you name it, Bristol Myers Squibb, you name the company who's a large company, and they have so much in assets, so much money. If they say, hey, we're gonna kind of bend the corner and do something a little shady here, and worst case scenario, we got enough money where we can pay out the settlement. We'll go ahead, calculate any potential settlement costs and our profits that we're making from doing this shady ass stuff. And it's crazy because when a financial institution is that large, a lot of people would say, like, oh man, if Bank of America, y'all saw the pages of litigation that I put up, you could go down that entire page. Bank of America, litigation. Wells Fargo, litigation. And you would think, like, well, if they're so deep in litigation from doing wrong things with their customers, with the government programs, why don't the government shut them down? Well, you got to think about it. It would be like if I were a doctor in a rural area and I was the only doctor in a 50-mile radius, so everybody in that 50-mile radius came to see me. If I fudge something up with my Medicaid reimbursement payments or something like that, or if I'm a bank and I fudge something up, you can't shut down an institution that's that large because you got to look at the amount of customers that institution is just serving. Like Bank of America, Wells Fargo, those pharmaceutical companies that I named, they're serving geographical areas that are so large that to shut them down would do more harm to the general public than good. So you can't shut them down. You can't shut them down. You just kind of got to eat the wrongdoing. When you can identify criminal intent, you throw them up, you throw a person in jail. When you can't identify any criminal intent, you make them pay for it out of their pocket, and you probably put them on. Essentially, it's called a corporate integrity agreement. But we caught you with your hand in a cookie jar. We're not going to throw y'all in jail because we can't prove intent. So what we're going to do, you enter into this corporate integrity agreement, and for the next 5 years, you have these additional reporting requirements. You have all of this additional stuff that you have to do. So, that's kind of the name of the game. But the government programs are made to be taken advantage of. That's just what it is. That's why, unfortunately, or fortunately, I guess fortunately, I always have some type of employment because people are always going to try to take advantage of the system. Hey, I appreciate everybody who tuned into this live. It was real impromptu because it just came out, and I was actually going to sit down and make a whole detailed video and have all of these pop-ups. But like I said in the beginning, by the time I thought about it, I was like, man, by the time I make the video and do all that stuff and put it out, it'll be Saturday and won't nobody be talking about this shit. So I said, I'm gonna go ahead and just do a live, put it out there. Again, the jury is still out. Right now, I think this whole Bank of America loans to minorities with no money down, not really looking at their real credit history, I think in the long run, it may be more problematic. So, hey, we'll see how it plays out. Y'all let me know in the comments y'all think it's going to be good or bad. Hey, y'all make sure before I get out, tomorrow's a crazy story. Every now and then, I like to talk on a nice story of fraud that's being committed. And this story is a story that touches home to me because it happened in the District of Columbia. It's a crazy story about a mayor who stole millions of dollars and committed suicide. It's absolutely insane. We're going to have some fun talking about it. Yeah, I agree. I give it 2 thumbs down as well. I think it's going to cause a lot of people to end up, jacking up that loan, not being able to potentially repay it back. And Bank of America going to capitalize on a lot of foreclosures and on a lot of interest that they made from the payments that people were able to make before they kicked them out. But make sure y'all tune in tomorrow. Mayor stealing money, $2.2 million, and committing suicide. It's kind of a wild story. We're going to get into it. As always, I appreciate everybody for tuning in. Hey, this was impromptu, so much love and respect to y'all. I appreciate it. And hey, I appreciate everybody watching, and I want to give a shout out. I thank y'all for the support because I hit 2,000 subscribers. So I'm definitely going to do something and do some type of giveaway or something for everybody who support everybody who watch. I'm working on some new merch now, so it's something going to be coming down the pike. I appreciate y'all support. Y'all take care and be blessed. Peace.